So Meta's earnings is a 23 PE ratio. Is it really that low? If so, that's pretty good. So again, we're heading over here from our FOMC meeting. Market's dipping down a little bit. Tomorrow we got jobless claims. Meta's pretty flat today too. I'm in Meta. I've been in Meta. Let me put, there's the Q. We'll put Meta in the Q up. We also have like ARM. Did redirect work? It should have worked. If it didn't, my bad. But it should have worked. Nothing here. Remember, nothing here is forward-looking statements, guys. Just to give my a quick little disclaimer. Nothing here is forward-looking and should be taken as investment advice. All right. Yep. Okay, cool. It brought everybody over. All right, nice. Yeah. In the stream. We're going to do a poll here as well, chat. Let me get everything up. So again, we're not liable for losses taken. So yeah, we're not liable for any losses. Nothing in this stream is forward-looking. And we're going to get some music playing as well. As such. Alright, there we go. We got our banner at the bottom. We're going to put Meta is expecting today 470 a share EPS. Pretty good margins, to be honest. 470. Meta's expecting, again, 470 EPS. On a revenue of $38.19 billion. Do they beat or miss? We're going to do a poll right here. So let's do a poll. Let me get some music playing here as well. Let me know if you can hear the music. You should be able to. Let's get the poll going. Does Meta beat or miss their Q2 earnings? Sorry for the keyboard sounds. Too political, Vishal. What's the picture of the bear in the background? Yeah, it's a... Yeah, it's a memorial picture back there for the bearish traders in the world, you know. What's it called when they put your paper in the newspaper, and your picture in the newspaper? So let's look at the, we did the poll here. We asked people, do they beat or miss? 82% of people think they beat, 18% of people think they miss. All right, Meta, we got ARM earnings. Yeah. All right, guys. Hey, John, off topic, you were asked about Uber earlier. Do you think Waymo and Tesla Robotics could be a threat to their business? I do, but I don't think we have to worry about that anytime soon. But I do think that could be a potential risk for Uber for sure. I think Uber is still struggling with profitability, but they've kind of taken over the country in terms of taxis. Like, they've basically replaced taxis. Everybody's using Uber. and people are using them very regularly. They just have to figure out a way to monetize them. I still think Uber's always going to be around, at least indefinitely. Eventually, they could be replaced, but I think that it's going to be something like kind of like streaming movie theaters. I think movie theaters are still around. People still use them. They're going to lose business when that happens, whenever it is. But I don't think it's worth betting against it short term. Personally. Again, I might be wrong. Maybe I'm wrong here. I don't know. Don't copy me. Not an investment professional. Not liable if you lose. Don't copy me. But with that said, I think they're going to be fine regardless. I don't have Facebook ads anymore. Yeah, so Meta earnings come out in about 25 minutes, yes. Yeah, y'all do me a favor. Hit that like button, guys. We appreciate it. You're going to be the first Robotaxi customer. Yeah, I think if they embrace it like Adobe did with AI, I think they'll be fine. Again, tomorrow is really the big one. Today's Meta earnings call is important. But we got ARM. There's a bunch of other big ones today as well that are massive. Alright, guys. Sorry for my dogs. Do we really have people using rate hike? Somebody just came into my house. Alright, guys. Meta will affect most tech sectors, usually chain reaction. Let's say Google reports other stocks. Yeah, I definitely think there's going to be some influence over tech. Did my dog just bark out the money calls? Yes. We like the dog, make him bark more often. Q's bouncing back on Bruce's bark. Are you expecting Reddit to rise after earnings? I don't know. Maybe. Depends on if they have good stuff coming out. I think some YouTubers call every meeting a rate hike decision, either out of... Yeah. I don't know why. NASDAQ looking strong. Yeah. Alright guys, this Meta beat or miss. Let's look at the poll. We did a poll not too long ago. Again, 70% of people think they beat, 30% think miss. That's Bruce. That's Bruce the German Shepherd. Show us the dog. This is Bruce about a year ago when he was just a little puppy. Let me find him. Bruce. This is him when he's about 7 months old. Thank you for the donation. I appreciate it. But that's Bruce, German Shepherd. He's cool. I'm not saying I play favorites with them, but Rosie's definitely my favorite. Look, these are my dogs. These are them when they were little puppies. This was like a year ago, over a year ago. They love swimming.
Drop it. There you go. Ready? Ready, Bruce?
Like they said, they love swimming. Dude, he is like a freaking Labrador, or a Labrador Retriever. Like, he is like a lab. He loves swimming. That's Rosie. She's the girl shepherd. She's like a little bit, she's a little bit domineering over him.
Ready? Drop it.
This is Bruce. He's sweet. He's a good dog. You know. Meta needs to hit, spent 3% profits back all position today. Yeah, honestly, my portfolio is very green today. I mean, we're pulling back a little bit over the last few minutes, but I'm just letting things ride. I'm not really taking profits or anything yet. I'm in Meta right now. Powell was bullish. I don't know, man. Powell was kind of neutral. I'm pretty sure Powell's going to cut rates, or Powell and the Fed are going to cut rates in September. That's what it seemed like to me, right? No, who knows if that's right or not. But for what it looked like to me, Powell's probably going to cut. Almost certainly Powell's going to cut, I think. You know. Yeah, what's really interesting though is that a lot of people's views are down. Like, a lot of YouTube views are down over the past, like, I would say, like, month straight. Like, I don't know if it's the summer slump. I mean, my channel's still doing pretty good. Like, again, you can kind of see me. Like, we're up. I was looking up, like, Matt Kors. I was looking up some other people. Like, everybody else's views seem to be down too. You can see I'm still okay. Like, we got 50,000 views over the last 48 hours, which is actually up a little bit over the last 7 days. But, like, you know, it's just interesting, right? It's interesting. A lot of people's views are, like, down. I don't know if it's... I have two theories on it. And again, we got over 20,000 views for the FOMC meeting, so, like, mine aren't doing that bad, but a lot of other people are doing really, really bad. And so I have two theories. A, the CrowdStrike glitch took out the algorithms for a lot of people, right? That's the first theory. Second theory is that YouTube updated their algorithm to get rid of spam bots. I haven't seen a spam Telegram scam comment on my YouTube channel in weeks. It's been weeks since I've seen one of the scam comments on my YouTube channel, and they used to happen literally every freaking stream. I used to see these guys show up on my channel. I'm curious of what that means, you know. Everything else has been pretty, like, you know, like, we had AMD earnings. They were pretty big yesterday. Like, yeah, he was getting pressure. They were asking Powell over and over and over again, like, hey, are y'all going to cut in September? And I appreciate that he gave guidelines. Usually Powell is much more reserved. He's not usually giving you guidelines on what they're going to do. I do like the fact, basically what Powell said is that the base case in September is a cut. The base case in September is a cut as long as inflation doesn't spike, right? And so if inflation comes in within a small range of expected values over the next 6 weeks, it's very, very unlikely that we're not going to cut in September. So if inflation comes in, PCE, CPI inflation comes in reasonable, it's very unlikely that we're going to cut. Or not going to cut, I mean. Yeah. So. What is this? I know how to jumpstart it. All right, guys. All right, calls on AMD. Yeah, I'm in a couple of these. Nvidia is what you want to watch, though. Nvidia's churning up. Nvidia's up to 118s right now for Nvidia. So Nvidia's moving. We got 15 minutes here. Let me put a timer up. Again, we got the expectations here. They all drop after the closing bell. So here we got about 15 minutes. This is when most of the earnings drop. Here, I think I'm a little bit late. Here, let me fix this. There we go. I like doing it like a minute before so that it counts down and we're good. Look at Q popping up. Again, Nvidia tested highs at 118. Oh, yeah, you're right. Did I say 28 billion? I did. Sorry, you're right. It is 38 billion. That's what I meant to write. But thank you for letting me know. I just missed that. They reduced my money supply and more is going to bonds. Why wouldn't it cool? Chip makers leave their skyrocket to go back to darkness. Carvana. Yeah, we got Riot, Blockchains, QCOM as well. So we have Meta, ARM. The two biggest ones I would argue are Meta and ARM for like AI implications. Meta and ARM are very big companies. QCOM is big. Carvana is big. Okay, Meta's earnings call is at 5. All right. Q's testing highs. Meta is very rangy here too. Look at the sideways range. Let's take a look at Meta's EPS and revenue expectations here. Mostly flat. Meta. I'm gonna show you guys how to find this. This is how you find it. Honestly, Meta. Honestly, I know they're benefiting from AI, but this is one of the best looking EPS graphs you can see. These are margins. That's a very nice EPS graph. Very nice EPS graph for Meta. Look at that. So Meta has very strong numbers, especially margins. I'm curious what their revenue is. I know they're going to benefit from AI. Here's their look at that revenue, man. Their largest revenue quarter was just over 40 billion, it looks like. What was it? Let's see. 40.112 billion. So 40.1 billion is their largest revenue. Today they're expecting what? They're expecting 38. So they're expecting a decrease in this. They're expecting something like a middle range between these two is what they're expecting. They're expecting like this. This is what they're expecting for their revenue. But again, is their PE ratio? Somebody said their PE ratio was 23. If it is 23, that's pretty cheap. That's pretty good. So, good EPS, good revenue. Slight decrease quarter to quarter, but that's all right. I remember the inflation was late for months after shipment costs 900 meta shares in July. Zuckerberg sold, I mean, 900 shares doesn't sound like a lot for Mark Z. Girk, but maybe. I remember the inflation was late for months after the shipment costs going up at 21. Nvidia and AMD, good earnings. 1 month out options on Nvidia are coming back. Yeah, Carvana, also one of the crazier stocks to report today. Carvana is a ridiculous company, like major gains that it's made over the last couple years, man. This thing dropped all the way down to under $10, and now it's at like 150 or something. So Carvana has had a crazy run. You get Meta up to 474s. So Meta's still trying, but flat. I'm all in AMD. I think that's risky. AMD is the only problem. Like, the problem I have with AMD is this. It's competitive with NVIDIA. Here, I want to make sure I'm right about this. Alright, so yeah, GPUs, they're competitive with NVIDIA. AMD produces the Radeon line of GPUs widely used in gaming. NVIDIA known for its GeForce GPUs. So, I don't know. I think in AMD, you can see NVIDIA did really, really well today. AMD did not. AMD basically filled a lot of the earnings gap that it put in. So, the problem with AMD is the PE ratio is so high for it. So high. Although the correction has been big, So, ARM, QCOM, Meta need to beat would be beautiful. Marquez, you say this about everything. You said this about AMD yesterday. You didn't even show up to the bigger FOMC meeting, and now you're saying it about Meta earnings. Maybe. I don't know. But, yeah, I don't know. Yeah, so when did the CrowdStrike issue happen? July 19th. I'm trying to track something here. Hey. Alright. Love you. Last Friday. John, do you have a regular job? I'm a real estate agent. I'm also a software developer with mostly freelance stuff. I do some of it, but it depends on what takes time and what businesses I have. I also have some investments and stuff like that do well. So mix of, I got a bunch of different income sources. The last 3 years have treated me pretty good, All right. NVIDIA and AMD relied on Taiwan semiconductors. Sure. Yeah, I saw that, Sam. I think that's making oil spike up. I think you said that earlier, right? Oil has been spiking up today. The Fed meeting didn't really slow it down either. We're at 78.50s for oil, CL futures. Again, at 78.50, so oil making big rebounds here, refilling the whole gap down it's made over the last 2 days on a longer term chart. So bought at 90, sold at 500. Yeah, Meta currently at 474s. Summertime baby bringing out the shorts. Meta has a good new patents, but I'm not touching it because I was never lucky with it. Maybe the stock knows. Yeah, maybe, bro. Can you develop a market maker tracker? I don't know. It depends on what kind of APIs are available for market maker information, to be honest. You know, it's all relative to the APIs that we have, you know. Yeah, I'm going to cover ARM, I'm going to cover Meta, I'm going to cover Riot, QCOM, Carvana, Western Digital, Etsy, Paycom, Teladoc. We'll cover all of them. eBay, you know, MGM. We'll cover all of these. Yeah, we'll cover all of them, but focus on Meta. All right, guys, we got 5 minutes till the closing bell today. Again, technically speaking, ARM is supposed to drop right at 4 p.m., so I'm going to put ARM up here. I'm going to put, ARM, the big three, which is ARM, QCOM, yeah, so I'm going to put the big three, which is ARM, QCOM, Meta. I have no idea what they're going to show up as. I take more of a reactionary mindset for earnings, more than a predictive one. I don't think predicting earnings is any type of edge. I think it's a coin flip. It's a completely random 50-50 shot for the most part, with a few examples, or with a few expectations, exceptions is what I'm trying to say. But I do watch to see what the earnings are. We cover them very quickly, and then we react to them here, you know, and we'll see what happens. Goldman Sachs sees downside risks to long-run oil demand into U.S. dollar, long-run Brent crude assumption. Yeah, but are they saying this as the macroeconomic weakness happens? Or the geopolitical problems cause oil to spike? Now they're saying they see downside risks to oil? I don't know. I don't trust Sachs, Goldman. I just don't trust them. Yeah, we're going to check Riot for sure. All right, chat, 4 minutes. 4 minutes. Do me a favor, hit the subscribe button. I'm trying to hit, we're going to throw it in sub-only mode. I'm trying to hit, I'm trying to hit, 150,000 is what I'm pushing for. All right, guys, 2.5 minutes. All right, take a sip of coffee so I stay up. Here we go. We got 2.5 minutes, chat. 2.5 minutes. Again, Goldman Sachs sees downside risk to oil. A lot of problems going on overseas. Alright, guys. I'm trying to check some other stuff here. When was the last Fed meeting, right? Alright, guys. QCOM just broke highs. Waiting for the earnings to drop. We got a minute and a half. Alright, guys, we got about less than a minute, or right around a minute left. Alright, there's the closing bell, guys. 20 seconds. Bye, 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 Bitcoin. June 12th. Yeah. So I'm trying to track something here. Alright, guys. Alright, so there's the closing bell. Watch for ARM, watch for QCOM. QCOM is spiked up, is it? Earnings aren't out for it though. Watch Meta though. Meta's right here on the left side here. It's at 475. We'll give you guys we'll show you guys when the numbers are actually out. Again, hit that subscribe button. We are in sub-only mode. Alright, so there goes QCOM flying up here. So QCOM at 190. So they posted 233 EPS versus 225 expected. Revenue of 9.39 billion versus 9.22 billion expected. We're going to put these numbers up in chat, but they are out. So again, QCOM numbers are live right now. Here's QCOM. Put those up on screen. Still waiting for Meta numbers. You'll be able to see when they move here. ARM hasn't moved. QCOM is up. ARM was also scheduled for the closing bell. They were expecting 34-cent profit per share for ARM. They haven't really moved either. They're up to 145s. There's a big candle in after hours. Look, that's big. Let's see if they're out. Again, QCOM up to 195s. Alright, so there's ARM, guys. ARM just ripped up to 148. Let's see if ARM is out. It looks like they might be. Look at ARM, guys. ARM just popped. All the way up to 152s, back down some here. ARM posted. Waiting for ARM. I don't see anything about ARM. Okay, ARM released their numbers. They posted revenue of 939. They expected 919. GAAP EPS was 21-cent profit. They expected 34-cent profit, but non-GAAP EPS was 40 cents. So they came in slightly above the 34-cent estimates. Again, 40-cent first quarter EPS. They expected 34 cents. Revenue was 939, better than expected. They see quarter two revenue at 830 versus expected 806. So they came in much better than expected. Even revenue was better than expected. but they still miss, or they still negatively reacting to this here. Check it out. Like, look. I'm trying to give you guys. So yeah, they beat expectations everywhere. Guidance was good too. They guided for 830 versus 806 estimates. So pretty good. They still kind of, I don't know. Hey, what's up, Franz? Thanks, man. Yeah, so we're at 476 right now for Meta. Waiting for Meta. But yeah, good guidance for ARM. I'm thinking they could rebound here. I mean, they're big percentage, so they move a lot. Interesting. Big percentage. Carvana earnings. So again, here's ARM. Let me look about Carvana here. So there's QCOM. QCOM's up big. We're still waiting for... Technically, Meta earnings are supposed to drop in 15 seconds. Here's Carvana. I can't type right now. There we go. Carvana up to 136s. All right, here goes Meta. Watch for Meta. This is when Meta's technically scheduled to come out. Wait. ARM posted. QCOM posted. Meta. Wow. Meta all the way up to 503s, chat. Meta earnings are out and they're up big. Carvana earnings are out and they're up a little bit as well. Meta up to over $500 a share here, chat, for Meta. They posted, bear with me. They posted 560 EPS, way better than expected margins. Revenue of 39 billion, better than expected. So way better than expected margins for Meta. They're up to 510s right now, and I am in Meta. So again, we are in Meta here. And they did way better than expected, chat. Way better than expected. Again, Meta posted 560 EPS. They expected 473. There's the numbers right there in chat, and they are up big from it as well. Wow. Wow, Meta up to 510s, 511s. I'm going to take just a little bit of profit off here, but stay in it, mostly. But yeah, Meta up big. Huh. 511s for Meta. I think ARM might rebound too. ARM had good guidance, chat. I might buy a little bit of ARM here too on this gap down. I think we might get some optimistic stuff for ARM here. Good guidance too. Get a nice little round position here. I'm gonna fill my one share. There we go. All right, we'll play around with ARM. We're right at the previous close. Man, what a move. Again, Meta's up. This is just gonna benefit the market more right now, I think. All right, so again, Meta posted better than expected numbers here. I'm going to see if we got more data from it. Here it is. All right, so yeah, Meta said, quote, "We had a strong quarter and Meta AI is on track to be the most used AI assistant in the world at the end of the year," said Mark Z, Meta founder and CEO. "We released a frontier level open source AI model. We continue to see good traction with our Ray-Ban Meta AI glasses, and we're driving good growth across all of our apps, or across our apps." Again, numbers came in good. DAP, which is family daily active people, is at 3.27 billion on average for June, an increase of 7%. Meta guidance showed up at 41 billion versus 38.1 billion expected. So their guidance actually showed good. Look, we'll put these numbers up in chat. Does not intend to provide any quantitative guidance for 2025 until the quarter 4 call. But again, their quarter 2 guidance did come in better than expected at 41 billion versus 38.31 billion expected. So good guidance. Nvidia just broke highs as well in after hours. So Nvidia just ripped up and broke highs in after hours chat. Wow, very strong. Nvidia 2 earnings partners, yeah. Ray-Bans, I can't look, as good as AI got, I don't know about the Ray-Ban glasses. I'm not a fan personally of them. I just don't think they're gonna have I think the customer base that's interested in something like that is small, and I don't think that they're gonna do too well. I think it's kind of a gimmick. I think Ray-Ban was definitely interested in doing some type of partnership deal with them or whatever, and so they're probably happy with it, but I think it's just gonna be a waste of time and energy. But maybe I'm wrong. I just don't know how good AI sunglasses technology has gotten, right? And maybe they're gonna update afterwards during this call. I'm not sure. What do you guys think of the Meta Ray-Ban partnership with the AI glasses? Again, Nvidia all the way back up to 120s in chat. Yeah, ARM is out. ARM did better than expected EPS, better than expected revenue, higher than expected guidance for ARM. So, anything else you guys want to see? All right, look at Carvana dump here. Earnings Whisper is down too. Look at Carvana dumped out, guys. Carvana just dumped down to 120s. Meta pulling down a little bit too. And again, if you haven't already, check out my sponsor, Apex. Apex gives you a demo. Do not day trade yourself with your own money. It makes absolutely no sense. I'm biased because they pay me money, you know. Biggest sellout in the world over here. But with that said, it genuinely is probably good for traders. Like, look, most day traders lose. And I think most day traders are going to lose on Apex as well. It's a lot cheaper to lose on Apex than it is to risk your own $5,000 as a new day trader. I get it. Listen, when I first got started, I thought I was going to be some type of savant genius day trader. I watched a bunch of Tim Sykes videos and I was ready to just be a savant day trader, you know, jumping out of bed like the move is on, buy, all sensationalist and stuff. But I'm here to tell you, you're probably going to lose money. Your first couple accounts, you're probably going to lose all of them. And so it makes no sense to risk your own money in the beginning. Apex gives you a demo. Test your skill. If you fail, you only lose what you pay for the monthly subscription. If you pass it, you get 25K in funding, tons of funding, 90% split, similar to putting the money up yourself. But if you lose, you're only out $35. And they've paid out hundreds of millions of dollars to their traders. They fund thousands of traders. They are a sponsor. Understand CFTC 4.41, hypothetical or simulated performance have limitations, all that stuff, chat. But honestly, there's the link. Check it out. Meta glasses can translate words for you. I think it's good if you're traveling overseas. Maybe there is a use case argument for it. It's just not something I'm super familiar with. It looks like me taking some off at the top was the right move because Meta is down. Look at Carvana all the way back up too. So Carvana all the way back up. Carvana posted, Lamb posted 814 EPS versus 758 expected. Western Digital posted 88 cents, big miss. eBay posted 118, beat expectations. Revenue beat expectations at 2.6 billion as well. So yeah, Meta coming all the way back down. I'm in ARM as well, and I'm down a little bit in ARM. But I'm still optimistic that ARM can bounce back. ARM had a pretty good earnings report. ARM had pretty good earnings. Now, are they the greatest earnings ever? No, but they had pretty good earnings. ARM sees quarter 2 revenue at 830 million versus 804 expected. Non-GAAP EPS of 23 to 27 cent guidance versus 27 cents as expected for margins, better than expected for revenue, much better than expected for revenue as well. Look at Carvana all the way back up to 150s here, chat. Wow. And Carvana is doing this because they say they expect to see a sequential increase in retail units in quarter 3 in fiscal year 24, adjusted EBITDA of $1 of 1 to 1.2 billion. Let me rephrase that. Look at Carvana go up to 151s here. Big move. Boeing had a positive reaction to earnings. Boeing had a terrible earnings report. They missed by a huge number in both margins on EPS and revenue, right? The difference, though, is that Boeing specifically had one little thing up their sleeve with this. Boeing ended up swapping out their CEO. When in doubt, swap out. And they swapped out their CEO and elected a new CEO and president. And that alone made Boeing actually have a green day, even though, in my opinion, it should have been a really, really negative day. Boeing's down a lot as well, though. So, like, I think we got to take whatever they showed up with a grain of salt, considering the fact that they've already massively overreacted on the downside versus how strong their business is. I think they're probably still pretty strong as a company, but they just massively overreacted to the downside over the past month. Yeah, man, if you had invested in Carvana in 2022, you'd be so rich. Yeah, Carvana had a crazy gain. Yeah, and again, we're under the previous closing price for ARM, unless we retrace very back very quickly. I'm not toying with this thing, I think. What's my profit target on SoFi? I don't really have one. I'm probably just going to sit in it. If SoFi becomes really big, then we'll be fine. You know? So I don't know if I have like a PT in SoFi. I'm just going to hold it as long as I can. Unless it goes too deep against me. I keep it simple with that type of stuff. Like with longer term holds like SoFi for me, I'm just holding it. I would cut it if it breaks down under $6, you know, for a relatively small loss, and it wouldn't be the end of the world, and I'd move on. Meta dumped back down under 500, and now it's back up. ARM trying to bounce back some. Nvidia's still breaking highs right at 120s though, so Nvidia's still trying to get over highs. I'm rocking out to this song. I like this song. ARM's still right at the previous closing price. ARM is completely neutral on the day. Hasn't moved at all. Meta's testing $500 a share here, so Meta's still got some time. Again, we got a bunch of big earnings reports already out. QCOM, most of them beat. Here, we'll go over them one more time. So, QCOM posted better than expected EPS, better than expected revenue. I think didn't QCOM start falling? Yeah, QCOM's up big. It's at 191s right now for QCOM. ARM posted better than expected EPS, better than expected revenue, good guidance, better than expected guidance everywhere. Meta showed way better than expected EPS, slightly better than expected revenue, and good guidance as well, gapping up to 500 plus. eBay posted better than expected EPS, better than expected revenue. Western Digital posted worse than expected EPS, better than expected revenue. Lamb posted 814 EPS, better than expected EPS, better than expected revenue as well. I'm gonna go ahead and I'm not gonna risk too much there. I was hoping we get a bounce back, and maybe we do, but These earnings is why I think the Fed's data is probably correct. eBay, there's still eBay. eBay actually has a use case argument. eBay is mostly meant for collectibles now, to be honest. So like Amazon is for new things. Used things a lot of the time are bought either on Amazon or eBay, but eBay is like the collectible market thrives on eBay, right? So eBay, I bought something on eBay within the last couple weeks. You know, my wife is really into like Monarch Tudor history, and so I bought her a piece of silver from the early 1500s with King Henry VIII's face on it. Some cool stuff. This thing says a King Louis the, what is that, 16th? Is it 14th? King Louis the 14th. Signed patent for cornet lieutenant. Whatever. Can I really get King Louis's signature for $850? That seems a little cheap for it. I know if I want to get King Henry's signature, it's like 30 grand, right? So $800 seems a little light. I wonder if it's a recreation of this. Meta will go red? I don't know. It's up a lot. We're still up over over $100 today in equities. What's your favorite long-term hold 5 years plus? If I had hold something for 5 year plus, I'm probably going with Apple, or I would go with like, can I diversify? Does it have to be just one stock? If we're talking 5 years, I'm probably going like Apple, you know. Yeah, I'd go with like Apple. But again, I'm biased towards Apple. Depends on how big AI gets, right? If AI gets really big, you could argue Microsoft, or you could argue, Google. But it depends on how big AI gets and how much room there is on the upside for AI moving forward. Nvidia, yeah. I'd probably go the S&P 500. ARM is down a little bit. I mean, ARM is down what? So let's average this. So ARM is down from 152s down to 130s. So it's down about $20 a share. 10% of 150 would be $15 down. So this is down like 18%. Or no, wait, it's 152, so it's a little bit more than that. Yeah. This is probably down like 17% right now for ARM. And I don't know if it's going to bounce back. So yeah, I don't know if it's going to bounce back. We'll see. ARM is up a lot since IPO. ARM's one of those stocks that I held from IPO day. I literally held this from IPO day. 15%, sorry. Yeah, Don, I'm putting you in timeout just because, like, number one, I promote all of them, right? But, like, we're not even talking about that, and so you're just trying to stir up stuff. We're talking about Meta earnings and ARM. We haven't even mentioned any of them, so. Apex is paid, like, look, Apex pays out hundreds of millions of dollars, by the way, as well, just to clarify, you know. You know. On PE at 100 though, not too surprising. Yeah, I mean the extension ARM has flown up from its IPO day. NVIDIA uses Taiwan semiconductor chips with ASML. 160 for NVIDIA. I don't see much robotics in my day-to-day life. In 5 years, I will. How is passing with the trailing drawdown? Well, you might lose a couple times, but you know, eventually passing's easy. I mean, you might have to refresh, reset, do whatever you gotta do, but again, it should be relatively easy, I would say. Eventually, you just gotta keep pushing. In theory, you could just scale up big and swing for the fences, and then once you're funded, scale down and trade more light, easy. But again, I'm not even claiming to be a good, profitable day trader or anything like that. I avoid like definitive statements in that way. I'm kind of like Powell for day trading. Like, I avoid definitive statements. I don't really claim to be super good or anything like that. It's just not really something I do, and that's why my channel was initially called Beginner Trading to begin with, because I'm not, like, they got a couple different ways. Some people acting like they're just the most profitable day traders ever. Usually they're not, and they're just kind of saying that so that they can convince you into buying their course or whatever it is. Yeah, I'm just not that type of person. I'd rather just tell people I don't know. I'll tell people they're sponsors of mine. If they choose to sign up anyway, then that's on them, and you know, try to be as honest as I can. They have a robot waiter at your casino? Really? If I'm being completely honest, right, like, I don't need to get funded on any of these funded account programs. Like, I just don't. Like, again, I'm going to preface this because people try to poke buttons and act like I'm bragging and act like they're offended or whatever, try to make fun of me for bragging. I'm not bragging. I'm just being honest. I don't need 25K in funding anywhere, right? Like, this account right here's got $400,000 in buying power. You know, and I'm not saying that's big or anything. There's some traders that have millions in buying power. I don't trade that large. I don't need to trade that large. But digressing back to the point, I don't need 25,000 in funding, you know. I just don't. But there's a lot of people different than me in that way, and they might need it, and they don't have that much money. They don't want to risk a lot, and I think for them it's worth it, you know. But did you play pro hockey? No. I was terrible at ice hockey as a kid. I played it, right? And my kids, my family jokes around because when they see me go ice skating, they're like, "Oh, you're Michael Scott," and I'm not Michael Scott. Like, I can ice skate, but I was a horrible hockey player. You know, it's funny when you're young. You're not very coordinated. I was not a very coordinated kid. It took me a long time to gain coordination. My strengths are I'm incredibly stubborn, and so if I really want to get good at something, I will. You know, I just never really wanted to get good at hockey. I always played it because my friends were playing it, and I think in hindsight, they probably didn't want me playing because I wasn't very good. You know, but I can ice skate at least now. But yeah, definitely wasn't a pro hockey player. I'm not sure where you got that one, but it's definitely not me. You know. I'll check somewhere else for Carvana numbers. You just gotta ask. Carvana numbers are right here, bro. They posted 3.41 billion, adjusted EBITDA of 355 million. Here's Carvana numbers right here. They're a little bit late on EPS though. I don't see EPS. There's them in the chat. Etsy out, 41 cent missed revenue, beat. MGM is out. They posted 86 cents, expected 62 cents, so they beat. I'm just excited about who will be number one in the future and lead the index. Yeah, I'm not sure who. It'll be fun to see, but I really don't know which stock that is. Robots are happening, can't stop, might as well invest in it. What do you think is the best robotic companies? People understand this for once, the market cannot be predicted. I mean, it definitely can be predicted. Whether there's any significant edge predicting is the argument you want to bring up, I would say. And for day trading, I think you can. I just think that it takes time and it takes a very specialized form of person to do it. And instead, it's marketed to everybody like they can get rich. And so they end up, again, like I said, when I first got started day trading, I lost thousands of dollars. And it was a lot of money to me at the time. And I thought I was going to be some savant day trading guru who shows my family and friends how smart I am through day trading. And instead, I just lost a bunch of money. You know, my wife was actually very sweet about it. It could have been a lot worse. But she was actually, for what she could have been, she was actually very sweet and nice about it. But yeah. It all worked out for the best because I started out as a day trader before I even started covering economics of the stock market. And so without becoming a day trader and trying it and losing, I probably wouldn't have started this channel and we wouldn't be here right now talking to you guys with almost 700 people watching. So, I mean, there's a benefit to it. Like, it all worked out, but, you know, I don't know if that's necessarily the same story for everybody. Best robotics. Yeah, I don't know where you said the VWAP, bro. You said Meta would drop under the VWAP in 3 seconds. Meta is currently at $496, almost $500. The volume weighted average price is under 478. At least my VWAP. It depends on which one you're using, whether you're using Anchored or not, but yeah, Nvidia's right at 120s. It's at 119.80s, so it's close. Meta calls in 30 minutes. Yeah, I'll put the timer up. It's in 30 minutes. It's in technically 28. Yeah, we'll call it 28:35. This is when the call actually starts. We'll stream it all live right here. Who's interested in AI robotics should watch the AI conference overseas in 2024. Beats earnings. Well, Meta's already out. Big. So Meta's already out. Meta is currently at 495s. Meta posted better than expected EPS by a large margin, better than expected revenue by a small margin. QCOM also pushing up some here. ARM is back up. Here's QCOM. QCOM up to 192.40s. So it's trying. All right. Again, we're going to cover the 4 earnings call live, as we always do. Super Micro Semiconductors. When is their earnings? I know Super Micro Semiconductors earnings are supposed to come out sometime soon. Did we put it in sub-only mode for this one? I'm pretty sure we did. Yes, we did. All right, good. Where are our subs at today? Get an arm at. ARM way overvalued. Yeah, the PE ratio is just really high for ARM. You know, if you don't know what the PE ratio is, if we look at ARM's numbers here, right? Here's their EPS. I don't think it includes today's. Today's came in at what? Yeah, so ARM struggles to maintain profitability for a company that's at $140 a share. You know, that's a problem. With revenue, at least. ARM showing revenue. Revenue's increasing as it should for a company with this type of growth. So we're at 193s for QCOM. What do you think about Roblox and its future potential? You know, I have kids, right? Like I have school-age kids. I have a 10-year-old son who freaking loves Roblox, right? Like it's impossible to pull him off that game. And so I understand what Roblox is more than a lot of people who don't play it that might not be young. Roblox is a marketplace of games more than just one specific game. They all have the same kind of cartoony style, right? But Roblox is a, you know, the only like Roblox is a big ecosystem, I guess is the easiest way to put it. The problem with Roblox though is that trends change over time, and right now Roblox is huge, and so the question is whether they can capitalize on the ecosystem that they have and use that to acquire more video game assets and like ecosystems. And if they can, then they'll be fine. But they're also down really big over the last few years. You know, in October of 2021, they were at $140 a share. They're now at $40 a share. So maybe there's some value at these levels here, but I think it's probably going to be fine if it makes the right business decisions, but that's not always the case, i.e. Blockbuster. I'm using Thinkorswim TD, not TD Ameritrade. I'm using Charles Schwab TD Ameritrade. Or Charles Schwab Thinkorswim is the platform I'm using. I think AI helps drugs, repurposing or drug repositioning the drug maker in the highest number of patents. Yeah. Just found you. Appreciate your calm demeanor. Thank you. Thank you, Space. If you think I'm calm, you just haven't joined the right streams. As we get closer to the actual report, we'll heat up a little bit. But for now, you know. Why are there news articles saying Meta already reported? They reported at 5 p.m., right? No, so okay, Captain. Yeah, so the call's at 5 p.m., right? And this is a big misconception about when people first start learning about earnings, is that they think that, like, people think that, people think that the call starts at 4 p.m. or that the earnings release late. The call actually is at 5 p.m. The earnings always release after the closing bell. And even if it's scheduled, right? Like today, ARM was scheduled for 4:05 and they reported it right at 4:05. But AMD yesterday, as an example, reported and they released as soon as the opening bell happened, even though they were scheduled for 4:10. And so one thing you learn very quickly is, number one, they're released sometime after the closing bell, regardless of the schedule they're on. They can be late, they can be very early, they can be right on time, like today Meta was, but they're going to release sometime after the closing bell for earnings. Number two is that the earnings call is usually either, there's three main times for earnings calls in the afternoon. It's either at 4:30, 5 p.m., or 5:30. I hate the ones at 5:30. Sometimes I'm not even going to cover those. I usually cover the earlier ones. But with that said, like we had 1,300 people here during Meta's earnings report with all the other big tech earnings. So most people follow the actual report of the earnings and not the call itself. But we stream the call kind of as a courtesy, and that gives us, an hour to talk about reactions, watch price action movements and stuff like that. So again, if you want a place that's going to go over all that stuff, subscribe. How old are you? I'm in my 30s, bro. I'm in my mid 30s, dude. I'm not 25. I'm not 20. Do you really think I'm 20? I mean, listen, I got good genes. I'm telling you that. I got top 3 best genes in the world right now. But I got high IQ, good looking, and I look young genes. So, tell Carol you're welcome. I'm partly sarcastic. Go back on a serious note. When I was 20, I looked like I was 13 years old, right? I looked like I was 12. Like, no girl wanted to be with me when I was 20 because I looked like I was a child. I hated it. That now can kind of pay dividends a little bit more as I'm older. If I can retain that youthfulness. But, top 3 oldest looking traders in the world right now. Reported earnings conference at 5 p.m. Yep. We got John bragging now. I'm kind of bragging. I'm sarcastic most of the time. I'm the top 3 greatest of all time. Honestly, if I'm being really honest, though, y'all just don't see me in person. If y'all saw me in person, you could see my wrinkles more in person. On the screen covers a lot of wrinkles because of, like, the distance. But if y'all saw me in person, I'd probably look older, which is fine. Elon is moving to all. Yeah, maybe. Do you have a portfolio for your children? Yes. Meta dropping. Meta's at 492s. The big level I think is 490s. That's where it bounced earlier in pre. ARM's still down. QCOM's still that big. What about Carvana? Carvana at 148s. You think Meta will rise at the open? I have no idea. That's something that nobody knows. It depends on where it closes. What do you think about Micron? I'm in MU right now. I hope MU goes up. I'm skeptical. I like the pullback it's made recently, but I also think that, like, anything could happen. I'm not sure. I'm in it. It's not a huge position. My Nike trade's almost green, though. My Nike trade slightly went green today. So, Palantir red. Or no, my Palantir trade's actually green. Shopify is green. Snapchat is green. SoFi is green. Don't smoke before you trade. I was never one of those people. Like, I was always like a really nervous person. I'm not saying I would ever do anything that you're talking about. But if I did, I was always kind of nervous person. super paranoid. And so again, I'm not much. I have kids. Like, it's just not worth it to me, you know. But when I was young and stupid, I was just too nervous to do anything. I'm 18. I started trading at the beginning of this year. Any tips? Trade small, trade slow. Don't try to get rich, and don't gamble your money. And just trade small, slow. Build up a sample size, analyze it, figure out what works. Don't get too stubborn. A lot of people stay with one strategy and they never change, even though the strategy signs are showing them that the strategy doesn't work, like high of the day breakouts. They'll buy high of the day breakouts, they'll get rejected on, they'll lose over and over again. They'll have like a 30% accuracy rate, but they'll keep trying high of the day breakouts with 30%, and they don't know why they're not making money. It's because you just keep trying a strategy that doesn't work. So be able to diversify your strategies, you know, figure out find one that really works, and then you can spend your energy on it, but make sure it works first. People waste time. Paper trade for sure. What does your wife do for a living? She works for a family company, but is mostly like a stay-at-home mom. Don't buy courses. Yeah, most courses are available. Like, I try to figure out the most delicate way to say what I'm trying to say. This is the internet. People charging you thousands of dollars for courses. Most of the time you can find the same stuff in those courses completely free online already. You don't need to spend $500 to $1,000 plus on a course. You can probably just Google and find the same type of content. You might even be able to find the actual course somewhere on the internet for free. I would never recommend that you Google and find some of these courses completely free on the internet somewhere. I would never tell you to do that. But I'm definitely not about to spend $500 or $1,000 on a course, you know. It's good, stay-at-home moms. Yeah, so the Meta conference starts in 15 minutes. I don't know, what I've found, like, you're talking about that university, or what I've found is that this whole mindset of, like, side hustles is the wrong mindset. Like, look, bro, like, you have different perspectives as you start to make money, right? And so, like, you might think, like, a couple $1,000s a month is cool until you start making more than that. And your perception of everything changes. Again, you think $2,000 a month is cool until you meet or start making $10,000 a month. You think that's cool until you meet or start making $30,000 a month. You think that's cool until 50, 100. You know, and your perception of it changes. What you learn very quickly is that the very quick businesses that people start, like the side hustles, are not very scalable. Right? Like, I don't need to find a way to make another $5,000 a month through labor of some sort. Like, I don't want to build a business like that. That's unless I can scale the business to where right now, at least, where I'm making millions of dollars a year from it. I don't really want to start a business that's going to make me $4,000 a month and I got to work all the time for it, you know, $5,000 a month. If I did that, I would just do real estate as a real estate agent full time. That's just not worth it to me. And so I think you have to be really, really selective about businesses that you start. You got to make sure it's something that's worth it. Like, I had a guy that wanted to start a jiu-jitsu gym with me. Like, I trained BJJ. And again, the more I looked into the business, you know, I'm just a white belt, right? Like, I think I'll get my blue belts relatively soon. But again, I'm just a white belt. The reason I didn't do it is because it's just not scalable. I didn't want to start Bad Blood with my current gym, number one. But number two, it just wasn't super scalable as a business. Like, you start all that money, you get locked up into long-term rent. I'm going to make, what, $4,000 a month net? Maybe, split between all my partners. Like, I'm good. That's not worth it. But for some people, it is. And I love jiu-jitsu. Like, it's one of my favorite things to do. But is it worth it to start up a gym and make a couple grand a month? No, it's too much work for too little gain. You got to make sure it's worth it. Airbnb is scalable though, right? But with scalability, you got to buy real estate, which is fine because that's a good long-term asset regardless. So I'm okay with that. Airbnb side hustle is fine, super scalable, good business that you can start long term, and regardless of whether Airbnb is still around, those are still long term good assets that you're gonna own, and so I think that's fine. But I'm talking about like a detailer, or like an automotive detailer, or like a window washer, you know, or a lot of stuff that's preached to young people online, which it's all the same regurgitated content about it, right? But it's, you know, I need scalability. Anyways, Meta earnings. Meta's bouncing all the way back to 496. Will it end over 500? Did I do another poll here yet? Let me see. Okay, yeah, let me end this poll. And then I'm going to do another poll here on, does Meta close over $500 a share today? Yes or no? Yeah, big earnings tomorrow. I am a white belt, 68 years old, just did my test. What do you mean test? Your instructor does tests? Now, if you're testing for your Series 7, yes, take some practice courses. You like Texas? I like Texas. Good economy for the most part. Good food. You know, high property taxes. 2.5% property taxes in a lot of places. It's crazy high. No state income tax, though, so it's all right. It's got pros and cons like everything else. Anyways, we're going to see if Meta can break 500. Carvana about to break highs as well. It's at 153s. I have 5 properties. I do monthly Airbnb rentals. Makes over 100K gross per year. For 5 properties, though, you don't make more than 100K? Do you mean gross, like tax gross, or do you mean gross before expenses? Carvana at 152s. It was only when I was doing short term. Why'd you stop doing short term? Short term seems like it's higher risk, high reward, but if you can find a property that sticks, it's going to really pay dividends. And if not, you gotta just throw a long-term rental person into it. All right. Yeah, I didn't see it, bro. Apple and Amazon earnings. Let me see your other comment. What do you think about Verizon, Apple, and Amazon tomorrow? I think they have the potential to really influence the market in a massive way. Apple specifically, Amazon as well. Verizon's insignificant. We're going to be streaming those live like we always do here as well, though. Yeah, I'm not going to be able to answer everybody's question, though. I mean, we got 550 people here, so I'm doing my best. Yeah, I mean, Airbnb's getting banned. You know, the problem is that, like, people... You got small towns, and small towns are going to benefit from the tourists that come for Airbnbs. You know, but for whatever reason, a lot of small towns get really weird. A lot of older people live there, and, you know, really they're hurting their own town because, like, a lot of towns live and, you know, like, survive off of tourists. And if you don't allow Airbnb, there's going to be less tourists. And so, I don't know. Like, I know a lot of people are trying to get rid of Airbnbs, but I think most of the time they're fine. A couple places where I'd probably vote against Airbnbs, but most places I'd, you know, it's all depends on the context of the place you're in. But investing in real estate investment trust is comparable to investing in real properties. Yeah, kind of. They can be. Yeah, it's the same thing. You could buy T-bill ETFs instead of investing in treasury bonds. I mean, what's your favorite real estate investment trusts that pay dividends? I don't know. I like real property, though, versus ETFs. I guess 3 minutes, or 7 minutes, I mean. About 130K gross before tax, but I have 1 house, 4 condos, 1 bedroom condos. Okay, so yeah. I mean, yeah, I heard 5 properties, and I was sitting there thinking, like, man, that should hopefully make more than 100K gross, right? But if they're 1 bedroom condos mostly, understand a little bit more understandable. I'm not saying, I think it's probably a good business strategy, diversified. A lot of work though, so you got to hire. I'm sure you have a property manager. You pay your percentage of your monthly rent to. That's probably the best move versus dealing with it yourself. Why NASDAQ fluctuating and going down mostly now? Because that's how the markets do it. Markets go up and down. You know, again, if markets had just a very easy, good results equaled positive reaction, bad results equaled negative reaction, markets would fly. Like, it would be very easy and predictable to be rich in the stock market. I would just sit and wait for Apple to report good earnings and then buy it, or Apple to report bad earnings and then sell it or short it. Again, though, unfortunately, it's just not that easy. And sometimes companies will report, like ARM is the best example. ARM had really good EPS, really good revenue, really good guidance, right? And what did ARM do? ARM dropped 15% from it, 10 to 15% from their earnings report. Good EPS, good margins, good revenue, good guidance. Drop 15%, right? So very quickly you realize it's not as easy and predictable as a lot of people want it to be. I manage them myself. Okay, you keep more money. Do you think Airbnbs in random neighborhoods would raise real estate taxes? I mean, it could. It just depends on where you are. Chipotle too, CMG or CMG. It's Chipotle, right? Yeah. Yeah, probably AZ. Apple will be good. No government contracts like Microsoft. Yeah. Why NASDAQ is fluctuating, going down now. QCOM is up. I would say most stuff's probably up right now. Nvidia's been breaking highs. Again, if you're wondering what the NASDAQ is doing, understand it almost always is going to follow Nvidia in this current market climate, right? So again, here's the QQQ, which is the NASDAQ 100 ETF. All right, and then here is Nvidia, right? Or no, I'm sorry. You can see, here's the NASDAQ and the Q. It's the same price action. Here's Nvidia, right? You'll notice something. Look a little similar. Watch, this is gonna crease back up too. Watch, next candle, this will crease back up. But watch how similar this is. I mean, it looks virtually identical. And so again, if you're looking to day trade, try a funded account program. In the funded account program, you can basically trade the same thing. You can trade the NQ, virtually the same price action here. Again, look at this. No PDT rule. You can day trade short, buy market, sell market. Your risk is less. Most day traders will lose, regardless of where they trade. If they trade a funded account program, they're probably going to lose. But it's a lot cheaper to lose here. They give you a demo. Test your skill with the demo. If you pass the test, they fund you. If you fail the test, you only lose what you pay for it. And there's much less risk than putting up 5K and risking that as a day trader. Here's the link. Again, they're about to drop right now. What's the AG and C divvy? Let me check. All right. AGD and C places a 144 annual dividend. It pays a 15% annualized divvy. It pays monthly? It does. A lot of risk here. So it's $10 a share. So say I bought 5,000 shares, investing 50K. They're going to pay me 14% annualized. So $700 annually. Anyway, that's 0.1%. Sorry, hold on. $50,000 times 14% is about $7,000 annualized times. So yeah, I mean, if I buy $50,000, they're gonna pay me $600 a month. and interest payments or in dividend payments for a real estate investment trust. The problem is like AG&C is risky here. All right, guys, we got 2 minutes. This thing moves up and down big percentages, and it's long-term downtrending. So big annual dividend, bad price action. All right, guys, you guys ready? Here, we're gonna get it loaded up. All right, y'all can hear the music, right? Did I post the link? Yeah, I did. Okay. Taiwan Semiconductors. Yeah, so I guess the point is like if the real estate investments are going to produce cash flow. If they're Airbnb, they're going to produce really good margin cash flow if they succeed at being an Airbnb. That's hard to replicate in a ETF. You know what I mean? Like in a real estate investment trust, it's hard to replicate, I think. So. Alright guys, we're gonna put Meta up. Put the queue up. They're about to start right now. I just put Meta up here. Alright. It might take decades to get your principal, but right, for sure. I'd rather have real property because at least there's like an added benefit of holding that, you know. Anyways, earnings call's about to start right now. Turn the music off. Waiting here, chat. We're still waiting. I'm gonna mute the background. Once it starts, let me know. Do a sound check. Let me know we're live. And you can hear the volume. Yeah, TSM's flying up too. Alright, so they haven't started yet. They're a little late. There's the Meta numbers. Again, they're late. We're waiting here. I think so, Eero. Sound check. Let me know if you can hear it.
Good afternoon. My name is Krista, and I will be your conference operator today. At this time, I would like to welcome everyone to the Meta second quarter earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. To withdraw your question, again, press star 1. We ask that you limit yourself to one question. This call will be recorded. Thank you very much. Kenneth Dorell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta Platforms' second quarter 2024 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
All right, thanks, Ken. And hey, everyone, thanks for joining today. This was a strong quarter for our community and business. We estimate that there are now more than 3.2 billion people using at least one of our apps each day. The growth we're seeing here in the U.S. has especially been a bright spot. WhatsApp now serves more than 100 million monthly actives in the U.S., and we're seeing good year-over-year growth across Facebook, Instagram, and Threads as well, both in the U.S. and globally. I'm particularly pleased with the progress that we're making with young adults on Facebook. The numbers we're seeing, especially in the U.S., really go against the public narrative around who's using the app. A couple of years ago, we started focusing our apps more on 18 to 29-year-olds, and it's good to see that those efforts are driving good results. Another bright spot is Threads, which is about to hit 200 million monthly actives. We're making steady progress towards building what looks like it's going to be another major social app. And we're seeing deeper engagement, and I'm quite pleased with the trajectory here. The big theme right now is, of course, AI, and I'll focus my comments today on three areas. What AI means for our family of apps and core business, what new AI experiences and opportunities we see, and how AI is shaping our metaverse work. So let's start. Across Facebook and Instagram, advances in AI continue to improve the quality of recommendations and drive engagement. And we keep finding that as we develop more general recommendation models, content recommendations get better. In this quarter, we rolled out our full-screen video player and unified video recommendation service across Facebook, bringing Reels, longer videos, and Live into a single experience. And this has allowed us to extend our unified AI systems, which had already increased engagement on Facebook Reels more than our initial move from CPUs to GPUs did. Over time, I'd like to see us move towards a single unified recommendation system that powers all of the content, including things like people you may know, across all of our surfaces. We're not there yet, so there's still upside, and we're making good progress here. AI is also going to significantly evolve our services for advertisers in some exciting ways. It used to be that advertisers came to us with a specific audience they wanted to reach, like a certain age group, geography, or interests. Eventually, we got to the point where our ad systems could better predict who would be interested than the advertisers could themselves. But today, advertisers still need to develop creative themselves. And in the coming years, AI will be able to generate creative for advertisers as well, and we'll also be able to personalize it as people see it. Over the long term, advertisers will basically just be able to tell us a business objective and a budget, and we're going to go do the rest for them. We're going to get there incrementally over time, but I think this is going to be a very big deal. Moving on to some of the brand new experiences that AI enables. Last quarter, we started broadly rolling out our assistant, Meta AI, and it is on track to achieve our goal of becoming the most used AI assistant by the end of the year. We have an exciting roadmap ahead of things that we want to add, but the bottom line here is that Meta AI feels like it is on track to be an important service, and it's improving quickly, both in intelligence and features. Some of the use cases are utilitarian, like searching for information or role-playing difficult conversations before you have them with another person. And other uses are more creative, like the new Imagine Yourself feature that lets you create images of yourself doing whatever you want in whatever style you want. And part of the beauty of AI is that it's general. So we're still uncovering the wide range of use cases that it's valuable for. An important part of our vision is that we're not just creating a single AI, but enabling lots of people to create their own AIs. And this week, we launched AI Studio, which lets anyone create AIs to interact with across our apps. I think that creators are especially going to find this quite valuable. There are millions of creators across our apps, and these are people who want to engage more with their communities, and their communities want to engage more with them, but there are only so many hours in the day. So now they're going to be able to use AI Studio to create AI agents that can channel them to chat with their community, answer people's questions, create content, and more. So I'm quite excited about this. But this goes beyond creators too. Anyone is going to be able to build their own AIs based on their interests or different topics that they are going to be able to engage with or share with their friends. Business AIs are the other big piece here. We're still in alpha testing with more and more businesses. The feedback we're getting is positive so far. Over time, I think that just like every business has a website, a social media presence, and an email address, in the future, I think that every business is also going to have an AI agent that their customers can interact with. And our goal is to make it easy for every small business, eventually every business, to pull all of their content and catalog into an AI agent that drives sales and saves them money. When this is working at scale, I think that this is going to dramatically accelerate our business messaging revenue. There are a lot of other new opportunities here that I'm excited about too, but I'll save those for another day when we're ready to roll them out. The engine that powers all these new experiences is the Llama family of foundation models. And this quarter, we released Llama 3.1, which includes the first frontier-level open source model, as well as new and industry-leading small and medium-sized models. The 405 billion model has better cost performance relative to the leading closed models, and because it's open, it is immediately the best choice for fine-tuning and distilling your own custom models of whatever size you need. I think we're going to look back at Llama 3.1 as an inflection point in the industry, where open source AI started to become the industry standard, just like Linux is. I often get asked why I'm so bullish on open source. I wrote a letter along with the Llama 3.1 release explaining why I believe that open source is better for developers, for Meta, and for the world more broadly. My view is that open source will be safer, will enable innovation that improves all of our lives faster, and will also create more shared prosperity. For Meta's own interests, we're in the business of building the best consumer and advertiser experiences. And to do that, we need to have access to the leading technology infrastructure and not get constrained by what competitors will let us do. But these models are ecosystems. They're not just kind of isolated pieces of software that we can develop by ourselves. So if we want the most robust ecosystem of tools, efficiency improvements, silicon optimizations, and other integrations to develop around our models, then we need them to be widely used by developers across the industry. And once we know that we're going to have access to the leading models, then I'm confident that we're going to be able to build the best social and advertising experiences. Part of why I'm so optimistic about this is that we have a long track record of success with open source. We've saved billions of dollars with Open Compute Project by having supply chains standardized on our infra designs. Open sourcing tools like PyTorch and React has led to real benefits for us from all of the industry's contributions. This approach has consistently worked for us, and I expect it will work here too. Another major area of focus is figuring out the right level of infra capacity to support training more and more advanced models. Llama 3 is already competitive with the most advanced models, and we're already starting to work on Llama 4, which we're aiming to be the most advanced in the industry next year. We are planning for the compute clusters and data we'll need for the next several years. The amount of compute needed to train Llama 4 will likely be almost 10 times more than what we used to train Llama 3, and future models will continue to grow beyond that. It's hard to predict how this will trend multiple generations out into the future, but at this point, I'd rather risk building capacity before it is needed rather than too late, given the long lead times for spinning up new infra projects. And as we scale these investments, we're of course going to remain committed to operational efficiency across the company. The last area that I want to discuss is how AI is shaping our metaverse work, which continues to be our other long-term focus. Last quarter, I discussed how advances in AI have pulled in the timelines for some of our products. A few years ago, I would have predicted that holographic AR would be possible before smart AI, but now it looks like those technologies will actually be ready in the opposite order. We're well positioned for that because of the Reality Labs investments that we've already made. Ray-Ban Meta glasses continue to be a bigger hit sooner than we expected, thanks in part to AI. Demand is still outpacing our ability to build them, but I'm hopeful that we'll be able to meet that demand soon. EssilorLuxottica has been a great partner to work with on this, and we are excited to team up with them to build future generations of AI glasses as we continue to build our long-term partnership. Quest 3 sales are also outpacing our expectations, and I think that's because it is not just the best MR headset for the price, but it's the best headset on the market, period. In addition to gaming, people are increasingly taking advantage of Quest's capabilities as a general computing platform, spending time watching videos, browsing websites, extending their PC via virtual desktop, and more. Horizon also continues to grow across VR, mobile, and desktop, and I expect that it will become an increasingly important part of that ecosystem as well. We're hosting our annual Connect conference on September 25th, and we will have lots of exciting updates around all of our AI and metaverse work, so I encourage you to tune into that. At the end of the day, we are in the fortunate position where the strong results that we're seeing in our core products and business give us the opportunity to make deep investments for the future. And I plan to fully seize that opportunity to build some amazing things that will pay off for our community and our investors for decades to come. The progress we're making on both the foundational technology and product experiences suggests that we're on the right track. I'm proud of what our team has accomplished so far, and I'm optimistic about our ability to execute on the opportunities ahead. As always, thank you to our teams who are pushing all of this important work forward, and thanks to all of you for being on this journey with us. And now here is Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis, unless otherwise noted. Q2 total revenue was $39.1 billion, up 22%, or 23% on a constant currency basis. Q2 total expenses were $24.2 billion, up 7% compared to last year. In terms of the specific line items, cost of revenue increased 23%, driven primarily by higher infrastructure and Reality Labs inventory costs. R&D increased 13%, primarily driven by higher headcount-related expenses and infrastructure costs, which were partially offset by lower restructuring costs. Marketing and sales decreased 14%, due mainly to lower restructuring and headcount-related costs. G&A decreased 12%, mostly due to lower legal-related expenses. We ended the first quarter with almost 70,800 employees, up 2% from Q1. Second quarter operating income was $14.8 billion, representing a 38% operating margin. Our tax rate for the quarter was 11%. Net income was $13.5 billion, or $5.16 per share. Capital expenditures, including principal payments on finance leases, were $8.5 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $10.9 billion. We repurchased $6.3 billion of our Class A common stock and paid $1.3 billion in dividends to shareholders, ending the quarter with $58.1 billion in cash and marketable securities and $18.4 billion in debt. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow, with approximately 3.27 billion people using at least one of our Family of Apps on a daily basis in June. Q2 total Family of Apps revenue was $38.7 billion, up 22% year over year. Q2 Family of Apps ads revenue was $38.3 billion, up 22% or 23% on a constant currency basis. Within ad revenue, the online commerce vertical was the largest contributor to year-over-year growth, followed by gaming and entertainment and media. On a user geography basis, ad revenue growth was strongest in Rest of World and Europe at 33% and 26% respectively. Asia Pacific grew 20% and North America grew 17%. On an advertiser geography basis, total revenue growth continued to be strongest in Asia Pacific at 28%, though growth was below the first quarter rate of 41%, as we lapped a period of stronger demand from China-based advertisers. In Q2, the total number of ad impressions served across our services and the average price per ad both increased 10%. Impression growth was mainly driven by Asia Pacific and rest of world. Pricing growth was driven by increased advertiser demand, in part due to improved ad performance. This was partially offset by impression growth, particularly from lower monetizing regions and surfaces. Family of Apps other revenue was $389 million, up 73%, driven primarily by business messaging revenue growth from our WhatsApp business platform. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q2, Family of Apps expenses were $19.4 billion, representing approximately 80% of our overall expenses. Family of Apps expenses were up 4%, mostly due to higher infrastructure and headcount-related expenses, which were partially offset by lower restructuring costs. Family of Apps operating income was $19.3 billion, representing a 50% operating margin. Within our Reality Labs segment, Q2 was $353 million, up 28%, driven primarily by Quest headset sales. Reality Labs expenses were $4.8 billion, up 21% year over year, driven mainly by higher headcount-related expenses and Reality Labs inventory costs. Reality Labs operating loss was $4.5 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. To deliver engaging experiences, we remain focused on executing our priorities, including video and in-feed recommendations. On Instagram, Reels engagement continues to grow as we make ongoing enhancements to our recommendation systems. Part of this work has been focused on increasing the share of original posts within recommendations so people can discover the best of Instagram, including content from emerging creators. Now, more than half of recommendations in the US come from original posts. On Facebook, we're seeing encouraging early results from the global rollout of our unified video player and ranking systems in June. This initiative allows us to bring all video types on Facebook into one viewing experience, which we expect will unlock additional growth opportunities for short-form video as we increasingly mix shorter videos into the overall base of Facebook video engagement. We expect the relevance of video recommendations will continue to increase as we benefit from unifying video ranking across Facebook and integrating our next-generation recommendation systems. These have already shown promising gains since we began using the new systems to support Facebook Reels recommendations last year. We expect to expand these new systems to support more surfaces beyond Facebook video over the course of this year and next year. We're also seeing good momentum with our longer-term engagement priorities, including generative AI and Threads. People have used Meta AI for billions of queries since we first introduced it. We're seeing particularly promising signs on WhatsApp in terms of retention and engagement, which has coincided with India becoming our largest market for Meta AI usage. You can now use Meta AI in over 20 countries and 8 languages, and in the US, we're rolling out new features like Imagine Edit, which allows people to edit images they generate with Meta AI. Beyond generative AI, the Threads community also continues to grow and deepen their engagement as we ship new features and enhance our content recommendation systems. Now to the second driver of our revenue performance, increasing monetization efficiency. There are two parts to this work. The first is optimizing the level of ads within organic engagement. We continue to see opportunities to grow ad supply on lower monetizing surfaces like video, including within Facebook as the mix of overall video engagement shifts more to shorter videos over time, which creates more ad insertion opportunities. More broadly, we are continuing to get better at determining the best ads to show and when to show them during a person's session across both Facebook and Instagram. This is enabling us to drive revenue growth and conversions without increasing the number of ads, or in some cases, even reducing ad load. The second part of improving monetization efficiency is enhancing marketing performance. We continue to be pleased with our progress here, with AI playing an increasingly central role. We're improving ad delivery by adopting more sophisticated modeling techniques made possible by AI advancements, including our Meta Lattice ad ranking architecture, which continued to provide ad performance and efficiency gains in the second quarter. We're also making it easier for advertisers to maximize ad performance and automate more of their campaign setup with our Advantage Plus suite of solutions. We're seeing these tools continue to unlock performance gains, with a study conducted this year demonstrating 22% higher return on ad spend for U.S. advertisers after they adopted Advantage Plus shopping campaigns. Advertiser adoption of these tools continues to expand, and we're adding new capabilities to make them even more useful. For example, this quarter we introduced flexible format to Advantage Plus shopping, which allows advertisers to upload multiple images and videos in a single ad that we can select from and automatically determine which format to serve in order to yield the best performance. We have also now expanded the list of conversions that businesses can optimize for using Advantage Plus shopping to include an additional 10 conversion types, including objectives like add to cart. Looking forward, we believe generative AI will play a growing role in how businesses market and engage with customers at scale. We expect this technology will continue to make it easier for businesses to develop customized and diverse ad creatives. We've seen promising early results since introducing our first generative AI ad features, image expansion, background generation, and text generation, with more than 1 million advertisers using at least one of these solutions in the past month. In May, we began rolling out full image generation capabilities into Advantage Plus Creative, and we're already seeing improved performance from advertisers using the tool. Finally, we expect AI will help businesses communicate with customers more efficiently through messaging. We're starting by testing the ability for businesses to use AI in their chats with customers to help sell their goods and services and to generate leads. While we are in the early stages, we continue to expand the number of advertisers we're testing with and have seen good advances in the quality of responses since we began using Llama 3. Next, I would like to discuss our approach to capital allocation, which remains unchanged. We continue to invest both in enhancing our core experiences in the near term and developing technologies that we believe will transform how people engage with our services in the years ahead. We expect that having sufficient compute capacity will be central to many of these opportunities. So we are investing meaningfully in infrastructure to support our core AI work in content ranking and ads, as well as our generative AI and advanced research efforts. Our ongoing investment in core AI capacity is informed by the strong returns we've seen and expect to deliver in the future as we advance the relevance of recommended content and ads on our platform. While we expect the returns from generative AI to come in over a longer period of time, we are mapping these investments against the significant monetization opportunities that we expect to be unlocked across customized ad creative, business messaging, a leading AI assistant, and organic content generation. As we scale generative AI training capacity to advance our foundation models, we will continue to build our infrastructure in a way that provides us with flexibility in how we use it over time. This will allow us to direct training capacity to GenAI inference or to our core ranking and recommendation work when we expect that doing so would be more valuable. We will also continue our focus on improving the cost efficiency of our workloads over time. Reality Labs remains our other long-term initiative that we continue to invest meaningfully in. Quest 3 is selling well, and Ray-Ban Meta smart glasses are showing very promising traction, with the early signals that we are seeing across demand, usage, and retention, increasing our confidence in the long-run potential of AR glasses. Finally, as we pursue these investments across near and long-term priorities, we will remain focused on operating the business efficiently. Turning now to the revenue outlook. We expect third quarter 2024 total revenue to be in the range of $38.5 to $41 billion. Our guidance assumes foreign currency is a 2% headwind to year-over-year total revenue growth based on current exchange rates. Turning now to the expense outlook. We expect full year 2024 total expenses to be in the range of $96 with our expanded infrastructure footprint. Turning now to the CapEx outlook. We anticipate our full year 2024 capital expenditures will be in the range of $37 to $40 billion, updated from our prior range of $35 to $40 billion. While we continue to refine our plans for next year, we currently expect significant CapEx growth in 2025 as we invest to support our AI research and our product development efforts. On to tax. Absent any changes to our tax landscape, we expect our full year 2024 tax rate to be in the mid-teens. In addition, we continue to monitor an active regulatory landscape, including the increasing legal and regulatory headwinds in the EU and the US that could significantly impact our business and our financial results. In closing, Q2 was another good quarter. We continue to execute well across our business priorities and have exciting opportunities in front of us to deliver more value to the people and businesses using our products around the world. With that, Krista, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press star one on your touch-tone phone. To withdraw your question, again, press star one. And please limit yourself to one question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Brian Nowak from Morgan Stanley. Please go ahead.
Great. Thanks for taking my questions. I have two, one for Mark, one for Susan. Mark, I wanted to sort of go back to some of the new generative AI-enabled use cases for users and advertisers. You talked about Meta AI, Studio, chatbots, diffusion models. If you could just sort of hone in on one or two of those that you're most excited about, we are seeing good signal that could be a real driver for the business in 25, 26, just so we sort of know, where are you most focused on all those opportunities and be helpful. And the second one, Susan, you have a lot of CapEx priorities from building new infrastructure for next generation models, compute capacity. Just walk us through again on the CapEx philosophy and any guardrails you have around ensuring you generate a healthy return on invested capital for investors from all the CapEx. Thanks.
I can take the first one. So I think the things that will drive the most results in 25 and 26 are actually the first category of things that I talked about in my comments, which are the ways that AI is shaping the existing products. So the ways that it's improving recommendations and helping people find better content, as well as making the advertising experiences more effective. I think that there's a lot of upside there. Those are already products that are at scale. The AI work that we're doing is going to improve that. It'll improve the experience and the business results. The other areas that we're working on, I think you all know this from following our business for a while, but we have a relatively long business cycle of starting a new product, scaling it to something that reaches 1 billion people or more, and only then really focusing on monetizing at scale. So, realistically, for things like Meta AI or AI Studio, these are things that I think will increase engagement in our products and have other benefits that will improve the business and engagement in the near term. But before we're really talking about monetization of any of those things by themselves, I don't think that anyone should be surprised that I would expect that will be years, right? I think that's like what we've seen with Reels. It's what we saw with all of these things. But I think, for those who have followed our business for a long time, you can also get a pretty good sense of when things are going to work years in advance. And I think that the people who bet on those early indicators tend to do pretty well, which is why I wanted to share in my comments the early indicator that we had on Meta AI, which is, I mean, look, it's early. Last quarter, I think, had just started rolling it out a week or two before our earnings call. This time, we're a few months later, and what we can say is I think we are on track to achieve our goal of being the most used AI assistant by the end of this year. And I think that's a pretty big deal. Is that the only thing we want to do? No. I mean, we obviously want to kind of grow that and grow the engagement on that to be a lot deeper, and then we'll focus on monetizing it over time. But the early signals on this are good, and I think that that's kind of all that we could reasonably have insight into at this point. But I do think that part of what's so fundamental about AI is it's going to end up affecting almost every product that we have in some way. It will improve the existing ones and will make a whole lot of new ones possible. So it's it's why there are all the jokes about how all the tech CEOs get on these earnings calls and just talk about AI the whole time. It's because it's actually super exciting and it's going to change all these different things over multiple time horizons.
And Brian, I can take the second question. On the ROI part of your question, I would broadly characterize our AI investments into two buckets, core AI and Gen AI. And the two are really at different stages as it relates to driving revenue for our businesses and our ability to measure returns. On our core AI work, we continue to take a very ROI-based approach to our investment here. We're still seeing strong returns as improvements to both engagement and ad performance have translated into revenue gains, and it makes sense for us to continue investing here. Gen AI is where we're much earlier, as Mark just mentioned in his comments. We don't expect our Gen AI products to be a meaningful driver of revenue in 24, but we do expect that they're going to open up new revenue opportunities over time that will enable us to generate a solid return off of our investment while we're also open sourcing subsequent generations of Llama. And we've talked about the four primary areas that we're focused here on the Gen AI opportunities to enhance the core ads business, to help us grow in business messaging, the opportunities around Meta AI, and the opportunities to grow core engagement over time. The other thing I would say is we're continuing to build our AI infrastructure with fungibility in mind so that we can flex capacity where we think it will be put to best use. The infrastructure that we build for Gen AI training can also be used for Gen AI inference. We can also use it for ranking and recommendations by making certain modifications like adding general compute and storage. And we're also employing a strategy of staging our data center sites at various phases of development, which allows us to flex up to meet more demand and less lead time if needed, while limiting how much spend we're committing to in the outer years. So, while we do expect that we are, going to grow CapEx significantly in 2025, we feel like we have a good framework in place in terms of thinking about where the opportunities are and making sure that we have the flexibility to deploy it as makes the most sense.
Your next question comes from the line of Mark Shmulik with Bernstein. Please go ahead.
Yes, hi. Thanks for taking the question. Just as we look at the revenue guidance and the outlooks, is any color you can share in just kind of the state of the overall digital ad market? And, you've highlighted some areas where you're seeing strength, versus kind of some of the idiosyncratic efforts you've made to kind of improve the efficacy of the ad product. Thank you.
Hi, Mark. We're continuing to see healthy global advertising demand, and we're also delivering, ongoing ad performance improvements just related to all of the investments that we've continued to make over time and improving these sort of ads, targeting, ranking, delivery, all of the fundamental infrastructure there. And we expect that all of that will continue to benefit ad spend in Q3. We do expect, year-over-year growth to slow in Q3 as we are lapping, strong growth from China-based advertisers, as well as strong Reels impression growth from a year ago. And we also expect modestly larger FX headwinds in Q3 based on current rates.
Your next question comes from the line of Eric Sheridan with Goldman Sachs. Please go ahead.
Thank you so much for taking the question. I'll just ask one. You called out building community size in WhatsApp in the United States as well as Threads. How are you thinking about those newer, faster growing elements of either messaging or Threads as a platform and the mix between the potential for engagement growth and overall monetization longer term of either the messaging layer or Threads, and what you're most excited about there to build to sort of capitalize on scale, but bring it back towards monetization? Thank you.
I can start, and Susan can jump in if she has anything else that she wants to add. So the WhatsApp stat, I think, is really important as a business trend, just because the United States punches above its weight in terms of, it's such a large percent of our revenue. So, before, WhatsApp was sort of the leading messaging app in many countries around the world, but not in the U.S. And I think now that we're starting to make inroads into leading in the U.S., as more and more people use the product and realize that, hey, this is a really good experience. It's the best experience for cross-platform communication and groups and all these different things. I think that that's going to just mean that all of the work that we're doing to grow the business opportunity there over time is just going to have a big tailwind if the U.S. ends up being a big market. So I think that that's one reason why it's really relevant. It's obviously also personally somewhat gratifying to see all the people around us starting to use WhatsApp. So I think that's pretty fun, but maybe somewhat less relevant from a business perspective. Threads, I think, it's another example of something that it got off to about as good of a start of any app that I can think of. I think it was the fastest growing app to 100 million people, and it's a good reminder that even when you have that start, the path from there to 1 billion people using an app is still multiple years. And that's our product cycle. And I think that that's something that is a little bit different about Meta in the way we build consumer products and then business around them than a lot of other companies that ship something and start selling it and making revenue from it immediately. So I think that that's something that our investors and folks thinking about analyzing the business have needed to always grapple with is, all these new products, we ship them, and then there's a multi-year time horizon between scaling them and then scaling them into not just consumer experiences, but very large businesses. But the thing that I think is just super exciting about Threads is that, we've been building this company for 20 years, and there just are not that many opportunities that come around to grow a billion-person app. I mean, there are I don't know, maybe a dozen of them in the world or something, right? I mean, there are certainly more of them outside the company than inside the company, but we do pretty well. And being able to add another one to the portfolio if we execute really well on this is just really exciting to have that potential. Now, obviously, there's a ton of work between now and there, and we're almost at 200 million, so it's a really good milestone. I'm excited about that. A lot of work between this and it being a large part of the business, but I do think that these kind of opportunities are pretty rare, and that's something that we're just really excited about. I think the team is doing great work on it.
Eric, I would just add to that in terms of nearer term sources of impression growth. We really expect that video is going to remain a source of impression growth for us in the second half. On Instagram, we expect Reels to continue to drive growth, while on Facebook, we expect to grow overall video time while increasing the mix of short-form video, which creates more impression growth opportunities. And generally, we expect continued community growth across our apps.
Your next question comes from the line of Doug Anmuth with J.P. Morgan. Please go ahead.
Great. Thanks for taking the questions. One for Mark, one for Susan. Mark, just in terms of infrastructure and CapEx, you've talked about currently building out not just for Llama 3 and 4, but really out to 7 perhaps, and then Llama 4, 10x the compute required versus Llama 3. Just given how much you're building ahead, how does that influence the shape of the CapEx curve over a multi-year period? And then, Susan, if you could talk a little bit more about the 3Q outlook. I know you're talking about tougher comps, but at the same time, it really suggests only a point of FX neutral decel at the high end. So just curious if there's anything else you can point to more specifically that's driving the expected strength here. Thanks.
Thanks, Doug. I can go ahead and talk about both of those. So your first question was sort of about the longer term, CapEx outlook. we haven't really, we haven't really shared an outlook sort of on the longer term CapEx trajectory. In part, infrastructure is a extraordinarily dynamic planning area for us right now. We're continuing to work through, what the scope of the Gen AI roadmaps, will look like over that time. Our expectation, obviously, again, is that we are going to significantly increase our investments in AI infrastructure next year, and we'll give further guidance as appropriate. But we are building, all of that CapEx again with the factors in mind that I talked about previously, thinking about, both how to build it flexibly so we can deploy to core AI and Gen AI use cases as needed, and making sure that we both feel good about the returns that we're seeing on the core AI investments, which we're able to measure more immediately, and that we feel good about the opportunities in the Gen AI efforts. Your second question was about the Q3 revenue outlook. Again, I mentioned this earlier. We have seen healthy global advertising demand on our platform. We're delivering, ongoing ad performance improvements, which again we feel like is the result of many quarters of effort, that have accrued and will continue to accrue value to our platform. We saw basically in Q2, where revenue grew 22%, that there was broad-based strength across regions and verticals, including particular strength among smaller advertisers, and we expect that, generally to continue into Q3.
Your next question comes from the line of Justin Post with Bank of America. Please go ahead.
Great. Thank you. I just want to get back to the comment on U.S. young adult user growth, especially maybe on Facebook and Instagram. I know you made a big change with Reels a couple of years ago, but what are those users doing on Facebook and Instagram? And can you give us any quantification of the usage growth? Thank you.
Thanks, Justin. So building products with young adults in mind has been a core priority area for the Facebook team in recent years, and we've been very encouraged to see these efforts translate into engagement growth. With this cohort, we've seen healthy growth in young adult app usage in the U.S. and Canada for the past several quarters, and we've seen that products like Groups and Marketplace have seen particular traction with young adults. Posting to Groups in the U.S. and Canada has been growing. That's been boosted mainly by young adults. And we also see that they are active users of Marketplace, which has benefited from product improvements and strong demand for secondhand products in the U.S.
Your next question comes from the line of Mark Mahaney with Evercore ISI. Please go ahead.
Yeah, I was going to ask about Marketplace, so that's a nice segue. It's a great, somewhat under-monetized or arguably very under-monetized asset. I know you indirectly monetize it, and it's a very large marketplace. It may even be bigger than eBay. Your thoughts on what you may want to do in the future in terms of monetizing it, in part maybe even improve the quality of the marketplace? And then secondly, I just want to ask you about headcount. It's down about 1% year over year. You're pretty much back at par with where the employee headcount was prior to significant reduction. How should we think about headcount growth going forward? You talk about a significant growth in CapEx. Should we expect a moderate growth in headcount? Significant? Any thoughts on that would be helpful. Thank you.
Thanks, Mark. On your first question, about Marketplace, again, we're obviously excited that it's been one of the drivers of strength in young adults. I would probably just say that more generally, Marketplace is one prong in a broader commerce strategy that we have, which continues to be focused on basically creating the best shopping experience on our platform. Marketplace is obviously consumer-oriented. The broader part of the commerce strategy is about making it easier for businesses to advertise their products, for buyers to find and purchase relevant items on our platform. And to that end, I would say that, we feel quite happy with also the investments we've been making in Shops ads. Shops ads revenue is growing at a strong year-over-year pace. We're seeing Shops ads drive incremental performance for advertisers, and it's also working well in combination with some of our other products like Advantage Plus shopping. Your second question was about headcount. We continue to be disciplined about where we're allocating new headcount to ensure that it's really focused on our core company priorities. But we're also working down a prior hiring underrun. And as we further close that hiring underrun over the course of this year, I do expect that we will end 2024 with in-seat reported headcount that is meaningfully higher than where we ended 2023. We aren't providing sort of 2025 headcount growth expectations yet, as we haven't started our budgeting process yet. But again, I expect that we will primarily target our hiring to focus on priority areas, and we will be, running a very disciplined headcount process.
Your next question comes from the line of Youssef Squali with Truist Securities. Please go ahead.
Great. Thank you very much. So the AI assistant using Llama 3.1 has been incorporated in different variations and looks really impressive and seems to be getting closer to becoming a full search engine for virtually everything except for commercial queries so far. So are there any plans to open it up to the broader web, kind of like what maybe OpenAI is alpha testing, maybe link it to third-party marketplaces for commercial search, et cetera? And then on Ray-Bans, can you maybe talk a little bit more about the opportunity to deepen your relationship with EssilorLuxottica? What would that look like? What kind of areas are the most exciting to you, Mark, in that relationship? Thank you.
Yeah, so I'm very excited with how Llama 3.1 landed. I think the team there is doing really great work. Going from the first version of Llama to Llama 2 last year, there was a generation behind the frontier to now Llama 3.1, which is basically competitive and in some ways leading the other top closed models. Meta AI uses a version of Llama 3.1, as well as a bunch of other services that we've built to kind of build a cohesive product. And when I was talking before about we have the initial usage trends around Meta AI, but there's a lot more that we want to add. Things like commerce, and you can just go vertical by vertical and build out specific functionality to make it useful in all these different areas, are eventually, I think, what we're going to need to do to make this just as to fulfill the potential around just being the ideal AI assistant for people. So it's a long roadmap. I don't think that this stuff is going to get finished in the next couple of quarters or anything like that, but this is part of what's going to happen over the next few years as we build something that will, I think, just be a very widely used service. So I'm quite excited about that. And we're going to continue working on Llama 2. So, I mean, you mentioned Llama, and I think the question was a little more about Meta AI, but they're both, they're related. Llama is sort of like the engine that powers the product, and it's open source, and I'm just excited about the progress that we're making on both of those. On the smart glasses, EssilorLuxottica is a great partner. We are now on the second generation of the Ray-Ban Meta glasses. They're doing well, better than I think we had expected, and we expected them to grow meaningfully from the first generation. So that's been a very positive surprise, and I think part of that is that it's just well positioned to dovetail well with the AI revolution that we're seeing and offering all kinds of new functionality there. So that was great. But EssilorLuxottica is a great company that has a lot of different products that we hope to be able to partner with to just continue building new generations of the glasses and deepen the AI products and make it better and better. I think there's a lot more to go from here, and it's compared to what we thought at this point, it's doing quite well compared to I think what it needs to be like a really leading piece of consumer electronics. I think we're still early, but all the signs are good.
Your next question comes from the line of Ron Josey with Citi. Please go ahead.
Great. Thanks for taking the question. I wanted to get back, Mark, to the comments around open source and Llama 3, and totally understand that Meta is not offering a public cloud. And so what I wanted to hear from you is maybe a little bit more on the product vision of products that come out of Llama 3, and meaning potentially offering some of these products to other companies, call it for customer service or call center offerings or other verticals. And so any insights on just how you envision maybe the open source and and Llama 3.1 can sort of offer greater enterprise services for others to benefit from? Thank you.
So Llama is the foundation model that people can shape into all kind of different products. So whether it's Meta AI for ourselves, or the AI Studio, or the business agents, or like the assistant that's in the Ray-Ban glasses, like all these different things are basically products that have been built with Llama. And similarly, any developer out there is going to be able to take it and build a whole greater diversity of different things as well. Like I talked about, I think the reason why open sourcing this is so valuable for us is that we want to make sure that we have the leading infrastructure to power the consumer and business experiences that we're building. But the infrastructure, it's not just a piece of software that we can build in isolation. It really is an ecosystem with a lot of different capabilities that other developers and people are adding to the mix, whether that's new tools to distill the models into the size that you want for a custom model, or ways to fine-tune things better, or make inference more efficient, or all different other kinds of methods that we haven't even thought of yet, the silicon optimizations that the silicon companies are doing, all this stuff. It's an ecosystem. So we can't do all that ourselves. And if we built Llama and just kind of kept it within our walls, then it wouldn't actually be as valuable for us to build all the products that we're building as it's going to end up being. So I think that's the business strategy around that. And that's why we don't feel like we need to necessarily build a cloud and sell it directly in order for it to be a really positive business strategy for us. And part of what we're doing is working closely with AWS. I think especially did great work for this release. Other companies like Databricks, NVIDIA, of course, other big players like Microsoft with Azure and Google Cloud. They're all supporting this, and we want developers to be able to get it anywhere. I think that's one of the advantages of an open source model like Llama is it's not like you're locked into one cloud that offers that model, whether it's, Microsoft with OpenAI or Google with Gemini or whatever it is, you can take this and use it everywhere. And we want to encourage that. So, I'm quite excited about that. The enterprise and business applications that we're going to be most focused on, though, in addition to just optimizing the advertiser experience, like I talked about in my comments earlier, it is the business agent piece. It's, I just think that there's a huge potential. Like I said earlier, I think, pretty much every business today, it has an email address, they have a website, they have social media accounts. I think in the future, they're going to have at least one, if not multiple business agents that can do the whole range of things, from interacting to help people buy things, to helping support the sales that they've done, if they have issues with the products, if they need to get in touch with you for something. And we already see people interacting with businesses over messaging working quite well in countries that have low cost of labor. But the thing is that in order to have someone answering everyone's questions is quite expensive in a lot of countries. And I think that this is like a thing that AI, I think, is just going to be very well suited towards doing. And when we can make that easy for the hundreds of millions of businesses that use our platforms to pull in all their information and their catalogs and their history and all the content that they've shared, and really just quickly stand up an agent, I think that's going to be awesome. So, we can combine Llama with a lot of custom work that we're doing on our business teams, and couple that with all the other investment that the rest of the ecosystem is doing to make Llama good. And I think that's going to be huge. But that's just one area. I mean, this really goes across all of the different products that we're building, both consumer and business. So it's a lot of exciting stuff.
Krista, we have time for one last question.
Thank you. That question will come from the line of Ross Sandler with Barclays. Please go ahead.
Great. Mark, so on Monday in your interview with Jensen, you said something along the lines of if scaling ended up stopping one day, you'd have 5 years of product work to do and ahead of you. So outside of agents or AI assistants, what other areas in AI are you thinking about or looking at in that 5-year roadmap? And then the second question is maybe one more stab at the capacity question. You guys said that Llama 3.1 was trained on 16,000 H100s. You've also said that you're going to have 600,000 available by year end. So even if we kind of go up to 160,000 GPUs for Llama 4, we have plenty of extra capacity for inference and future products. I guess, how are you guys modeling out this entire kind of CapEx roadmap between training, inference, and future things? That's all. Thanks a lot.
I can start with the first one, and then I'll let Susan answer the second one. It's an interesting question. It's a little hypothetical because I do think it's true that if, let's say, there were no future foundation models, I think there would just be a huge amount of product innovation that the industry would bring to bear, and that just takes time. But then at the same time, there are going to be future foundation models, and they're going to be awesome and unlock new capabilities, and we're planning our products around those. So I'm not really planning our product roadmap assuming that there isn't future innovation. To the contrary, we are planning what's going to be in Llama 4 and Llama 5 and beyond based on what capabilities we think are going to be most important for the roadmap that I just laid out. For having the breadth of utility that you're going to need in something like Meta AI, making it so that businesses and creators and individuals can stand up any kind of AI agents that they want, that you're going to have these kind of real-time multimodal glasses with you all the time that will just be increasingly useful for all the things that you're doing. And that, I guess this kind of dovetails with what I'd expect Susan to talk about next. And we do have this huge set of use cases already about people wanting to discover content and interact with their friends, and businesses reaching people, and all that stuff is getting better with this too. So there's I guess my point there was it's just there's some lag between a technology becoming available and the products becoming kind of fully explored in the space. And I just think that was kind of my way of saying that I think that this is just a very exciting area where there's just going to be a lot of innovation for a long time to come. I'll let Susan take a stab at the numbers around the GPUs and all that.
Thank you. We are clearly, in the process of building out a lot of capacity, and Mark, has alluded to that in his comments about, what we have needed to train prior generations and the next generation of Llama. And we are, and that's driving sort of what we've talked about in terms of the significant growth in CapEx in 2025. And we aren't really, in the position now to share a longer term outlook. When we think about sort of any given new data center project that we're constructing, we think about how we will use it over the life of the data center. We think about the amount of capacity we would use in terms of training whatever the subsequent generations of Llama are, and it's architected around that. But then we also look at how, we might use it, several years into its lifetime towards other use cases across our core business, across what we think might be future needs for inference for generative AI-based products. So there's sort of a whole host of use cases for the life of any individual data center, ranging from Gen AI training at its outset to potentially supporting Gen AI inference to being, used for core ads and content ranking and recommendation, and also thinking through the implications too of what kinds of servers we might use to support those different types of use cases. So, we are really mapping across a wide range of potential use cases when we undertake any given project. And, we're really doing that with both a long time horizon in mind, again, because of the long lead times in spinning up data centers, but also recognizing that there are multiple decision points in the lifetime of each data center in terms of thinking through when to order servers and, what servers to order and, what you'll put them towards. And that gives us flexibility to make the sort of best decisions based on the information we have in the future.
Great. Thank you all for joining us today. We appreciate your time, and we look forward to speaking with you again soon.
All right, guys, so that is it for today's Meta earnings call and stream and the FOMC meeting. Overall, markets are flying up. NVIDIA just tapped 120, back up to basically where it was, went right down to $100. Look at that $100 test here, bounced literally directly off of $100 and then had a huge rip up. Part of this is from the FOMC meeting, which dropped about right here. Remember, tomorrow we have jobless claims, Apple, Amazon earnings. It's an absolutely ridiculously large day. And honestly, this is all in a period of time in which market interest and volume is very, very, very low. There's a couple reasons. Number one, election year. Less people are confident, more people are apprehensive, especially with the ambiguous outcome of the election. Nobody knows what's going to happen. We'll see what happens there. Y'all be good. Tomorrow, Apple, Amazon, jobless claims, unemployment filings, and more. We will be back tomorrow morning. Check out Apex if you want to learn to day trade with limited risk. Your risk is $35 a month per account, and if you lose, you're only out $35. If you pass the test, base one, they give you a 25K demo. You got to make 1,500 without losing 1,500 first. If you pass that test, they fund you 25K, 90% split. If you lose, you're out $35. Best of both worlds. Limited risk, 90% split if you pass it, and they pay out hundreds of millions of dollars in the futures market. And it just makes sense. Most day traders are going to lose there as well, because most day traders lose. It doesn't matter whether they're on TD Ameritrade, whether they're on Schwab, whether they're on Thinkorswim, E-Trade, or whether they're on Apex. Most day traders lose. It's a lot cheaper to try an Apex account than it is to lose 5K with your own money. And so try it out. Great way to help support the channel. I love you all. We'll be back tomorrow bright and early. Appreciate the love, guys. We grew by like a lot of subscribers today. We grew by 600-700 subscribers today. Maybe it's like 500. But I appreciate the love. Thanks so much. And yeah, I'll see you guys later. Y'all be good.